2026 won't be a housing crash, but it won't be smooth sailing either. We're in the middle of a tug of war at the moment. The economy is slowing down. Unemployment is going up. At exactly the same time, we have the severest housing shortage our country has ever seen. In this video, I'm going to go through the 6 factors that will drive the next leg of the everything, everywhere property boom that you need to know about. We're going to go through the population growth rate story. We're going to go through housing supply levels. We're going to go through interest rate settings, first home buyer grants. We're going to touch on the price of gold and what it tells you about house prices in 2026. Finally, I'm going to touch on the employment story. And for those that stick around to the end, you'll get my thoughts on the biggest danger to the entire prediction process for 2026. Watch the employment story. Hi, I'm Redam Syed, ex-Treasury economist and current founder of Alea Property and Flint Invest, where we help property investors get money, buy property, and grow and scale their property portfolios. The population growth rate story in Australia is changing. If you've watched this channel over a number of years and you hear the general narrative, you talk about population growth rates too high, there's too many people coming into the country, oh my God, housing supply, big danger. But this trend has turned around. Population growth rates have come down, and quite significantly too. In 2024, we added 446,000 new people in total. But it was a little bit like this, a big roller coaster up, way too many people, and then now it's come back down very strongly too. So on balance, we added 446,000 people. In 2025, 2026, and beyond, we are now expecting that number to fall by around 15% and come down to around 390,000 according to this report. So that downward trend that you see here will continue. This is huge for property prices, and it's one of the underlying drivers of demand that's being pulled back. It's being really teared back by the government being like, no, we need to slow down the number of people coming in. And you can see that in some sectors like the university sector really slowing down and having all these redundancies because we're bringing in less people, and that means less housing demand. That's why it's a key story. You need to know about this. When you break it down by state, you get some even more interesting analysis here. You got big overseas migration in Sydney and Melbourne, you'll always have that. You got big interstate migration out of New South Wales, again, you'll always have that. But population growth rates are very interesting state by state. Queensland, take a look at this. You have positive bars in every direction. People coming in, people having more kids there than people passing away. It's the migration story from outside Australia that's changing the Queensland economic growth story as well. Very interesting there as well. South Australia as well, big net overseas migration. Obviously the numbers are much smaller because South Australia is a much smaller place than New South Wales, at least in terms of population. WA, really strong population growth rates there as well. The population story, the most interesting thing is the population is actually going into the markets that have the severest housing shortages. If you wanted to fix housing, you can actually drive more and more people into Melbourne right now being like, hey, there's another giant tower that's about 70 levels high in the sky that you can't even see with clouds everywhere. There's another one of them going up in Melbourne, and another one, and another one. Yet the population growth story is actually shifted into markets like Brisbane, like Adelaide, like WA, the markets that aren't producing enough housing. So that is really interesting, and it forms the basis of the property price predictions that we've already uncovered here as well, where it's like population growth rates are driving the weird growth rates in these markets. That is one interesting takeaway from this report and from this chart. The housing supply story is super interesting as well. We've been talking about a housing shortage for a long time now in Australia. And yes, we will remain in a housing shortage in 2026. That's why rents are going up and house prices are going up. Yes, that's going to happen. But here's the thing. We are actually going to build enough homes for the people we are bringing in 2026. That means we're not adding to the housing shortage story for the first time in 4 or 5 years since the COVID lockdowns and bringing in all those people. We're not adding to the problem anymore. We are just slowly going to take a little bit of that problem away, which should mean vacancy rates start trending up again at some point in the back half of 2026. But the real takeaway, the real message that you should think about as a property investor, this is absolutely key. I think property investors have been booming up right now because they are backing The government will fail at providing housing supply. They have continued to fail, and that is kind of what they're investing in. They are investing in the fact that there is a housing shortage, and that housing shortage will continue, so property prices will go up. It's like this normal property investor theory, the herd theory. We've seen it all go on for a while, and now we get excited, being like, hang on, this has been happening for so long. Let's jump in, let's jump in, let's jump in. You have that in property investor rates right now, sitting at 2017 levels. People are jumping in, even though the economics is a little bit funny, which I started this video with. But the economics of housing supply and demand are starting to shift. We are now entering the year where we move into housing balance. In 2027, I think we're going to move into housing oversupply. And we're going to start meeting that shortage, and you're going to see vacancy rates get back to normal, and we're going to be in a healthy sort of balance between demand and supply again. And it may even get worse in 2028. We may enter overbuilding phase for a number of years. You know why I think this? I'm going to show you a little picture here. This is me on one of my property investments. You know what I'm doing? It's currently 2 houses, 2 families live there right now. I'm putting a DA in for 110 homes on this very parcel of land. On another block I own, it's a group of people that live in there as well, 1 single family. I'm putting 14 apartments on this dwelling. It's everywhere. If I alone am adding 120 odd homes to the housing approval numbers in 2026, imagine the number of property investors all across Sydney and Melbourne and across the country that are going to do the same. The economics of housing supply and demand are changing. The government have changed the taps. They've been talking about it. You hear this 1.2 million home goal and you're like, we're miles away from it. And yes, that's true. But they made their moves, and come 2026, you're going to start seeing housing approvals shoot on up. And come 2027, you're going to start seeing us enter this oversupply period. And come 2028, 2029, 2030, that is the period where you're going to have more homes being built than the people coming in, and we're going to really take the pressure off, and rents might even start coming down a little bit, as crazy as that sounds. Let's quickly touch on the interest rate story as well. This one's really interesting because I've been sitting here trying to work out what's going to happen to interest rates, and this is a big change as well that you need to kind of factor in for 2026. We've been talking for so long about interest rates coming down, the expectation of interest rates coming down. The narrative might shift completely now, and it might just go to the point where it's like, no, interest rates are where they're supposed to be. They're going to be here for a period of time, and we may have no rate changes all in 2026 and get used to that too. That's a little bit of a shift, and it does change the dynamic as to where to invest. We didn't really understand where the setting interest rate would be before they keep coming down. We expected it to be a little bit lower. The RBA were communicating more rate cuts. All the bank economists, they're still communicating more rate cuts are on the way. But they're slowly changing the language behind that. You've got employment slowing down, but you also have inflation too high. So we might be in a position where it's like, no more rate cuts for you Australians. The housing market's a little bit too strong. Property investors are jumping in all over themselves. Do we really need a rate cut? If that doesn't happen, it does change the dynamics around a little bit, and it does signal that Sydney and Melbourne will not grow as much because they're the most interest rate sensitive economies, and Adelaide too, and Perth and Brisbane too. They'll all come down a little bit from the potential growth that they could have because interest rates will inflate markets if they go down. But that change seems like it might not happen right now in late 2025. The prediction for interest rates has changed. That could change the outcome of this everything everywhere property boom and how long it goes for. One of the other factors that have come out is the 5% housing deposit scheme. And now I can get very narrow as to what markets will do well. Check out this table that shows the change in the cap that people are going to be able to purchase in. The change is what you're looking for because that's all the new people that couldn't get it last month or a couple months ago, but can get it today and into 2026. In New South Wales capital, so in Sydney, the $900,000 to the $1.5 million mark, hey, you're going to do very well. I've already seen that all around where I live. Apartments sell for around this 1.2, 1.3 million. They have gone up 10% pretty quickly already. And I think these price caps might be a big reason why. You've got Victoria, not much of a change there. You've got it going to 950, so the 800 to 950 market will be very positive. Brisbane, the $700 to $1 million market, will be doing really, really well there. Those are the main sort of takeaways, and the ACT up to $1 million as well. Really, really interesting. Those are the price caps that have changed. It will alter the segment of demand because you have a new buyer in these price points, specifically with 5% deposits that go on purchasing that weren't there a few months ago. So that is why these price points will do well. The next one is so interesting. The rise of gold. Gold prices are going up. When gold prices go up, real estate prices also follow that general trajectory too. They are hard physical assets. And in an environment where it's a little bit nerve-wracking, in a stagflationary type environment where unemployment is trending up, growth is low, inflation's high, this weird economic situation we're in at the moment, people run to the comfort of real estate. And that's what you're seeing right now. Investors are shifting their asset selection and moving over to real estate right now like they are moving to gold. That's one of the key takeaways to take out from that big behavioral shift in what investors are purchasing. Finally, let's touch through the employment story. You can see the unemployment rate here trending on up, but the number of people who are employed is sitting at a very high level and continuing to rise. So the unemployment story will be super interesting, and it's where my take really sits on. This is what I think will make or break 2026, and I think this is what could break the everything, everywhere, everyone property boom, definitely the everyone component. The unemployment rate story is what to look at. Will it change? Will unemployment go up higher than expected? Will the economy slow more than expected? Will inflation stay higher than we expect? These three questions, these three answers to these questions will signal so much information as to how long this boom will go on for. And in this video, I've already shown you where house price growth and this underlying housing supply issue, when it will end. We've only got a couple of years left, but the answers to these questions on the economy and employment will really drive whether it happens over the next few years at all.